Time to say hello and good morning to Vikas Khemani. And is he ready? Looks like he had gone for a long weekend. 10 minute late show par hai.
Sorry, Nikunj, I just got stuck somewhere.
No
But
worries.
good to connect with you.
Likewise. Uh, okay, I have a sheet which says market view of Vikas Khemani. Short term bullish, medium term bullish, long term bullish. Short term bullish, medium term bullish, long term bullish. I like your view. But let's understand why are you bullish in the short term, why are you bullish in the medium term, long term, everybody's bullish.
Yes. So I think, Nikunj, if you see the earnings season, I think everywhere, I think by and large, the earnings have been very good. I see no major sort of risk to the economic growth of the country. Liquidity profile remains very strong. So, whenever there is a correction, you always see liquidity on the sideline coming and entering in the market and providing the support. So I think, right now markets are in a I mean, we have seen a good earning trajectory. So I do not see any major risk. We know state elections are around the corner, but despite I mean, I don't think there's any major expectation, coming from the state election. So a lot of negative news is kind of factored in. So I really don't see any reason for major correction. I mean, technical corrections, a few percentage here and there can always happen for any reason. I don't see any deep correction happening in the market. And I think the economic growth continues. You are seeing the infrastructure investments. I mean, all the drivers of the economic growth are doing very well. And so short-term markets are driven by liquidity, which is also fairly strong. I feel I mean, in next 6 to 12 months, you will see massive liquidity coming from the foreigners, which has been missing off so far. That will drive the market even further, and which is what makes me bullish on in a medium term as well. I think as the interest rates are sort of peaking out or have peaked out, in my opinion, in US, you will start seeing flow coming towards India, in a slow and steady manner, and that should happen in next calendar year anytime, and that's what makes me bullish on medium term.
That's in the very near term, morning, firstly, since you did allude to the point of state elections, could it be a market moving event at all?
So I think right now, I think market expectation is probably one or two states BJP is getting, and actually more like one. So any disappointment probably further won't put any setback, and any positive side can only act as a catalyst on the positivity side. Negativity is factored in, positive is can surprise the market. So let's see. More importantly, I think by and large there's a consensus that state elections won't have impact on the general election coming next year. And hence, I don't think this will be a major event. Of course, if there's a positive surprise, if BJP gets, let's say, 3 states out of 5, then probably it could be a smooth lifter or sentiment lifter. But I do not see, in case other way around, any major setback.
You are bullish on pharma. You think the theme is at an inflection point. You think there is value in the pharma space and there is scope for re-rating. Now, pharma stocks were cheap 6 months ago, but you still like pharma. Let's understand why. What do you like within pharma? If we say pharma, it's a very general term. You have to be very, very specific. With banks, I can generalize. With IT, I can generalize, but with pharma, you have to specialize.
In bank and IT, we may not generalize. I think there are always niche which does well. Within IT, when there's a perception that all along, IT sector, then headwinds. I mean, this year, all mid-cap ITs have done well. In our fund, most mid-cap ITs have up 50 to 80%. So I think in every segment, there are generalizations, there are specifications. Coming to a point in pharma, I think very clearly, if you see in last, 7, 8 years, pharma domestic business has been doing all right, but the international business has been under stress, especially coming from the regulated markets. And that part seems to have stabilized in US. Recently, there was a medicine shortage. US FDA visitor was here, a regulator was here. I think so. Clearly, there is a easing of the pressure happening in the regulated markets, and that would obviously what was loss-making proposition for many companies is expected to do well. So that is one part of the pharma. I think looks very good. We are very, very positive on the CDMO and CRO space, which we think is a very structural trend over the next 5, 10, 15 years. You will see CDMO as a space, I think probably similar to and it's a very small space right now, but what we saw similar in IT, you could see in CDMO space, especially specific to the pharma. It's a very, very structural trend where the outsourcing of, drug research, discovery, and manufacturing will move in a very large proportion away from China and Europe. That's a very structural trend. So, you can play, there are pockets of each, and each pocket has a driver differently, and you have to play out that. So we right now like companies with a bit of a US exposure. Of course, domestic market continues to do well, so we are positive there as well. and CDMO space is something we are very, very positive and bullish about.
Right, and
In your top holdings, I can see Loris. I mean, this again declared portfolio. Let me scan through it. Yes, I can see Loris. I can see Syngene International. I can see Newland Labs. So, are you bullish on them specifically because of the thesis you said? There is Loris and then there is Syngene. Yeah. Two very different companies, Vikas.
Not really. I think if you see underlying theme remains same, and Lotus is, surely transitioning from an API play to CDMO play. They have done a massive investments, capacities are ready, orders can come anytime. Newland is a CDMO play, Syngene is a CDMO play. So the underlying theme which I referred to is very, very much prevalent in all these three companies which you referred to. I mean, Newland, if you see, this is what happens in a CDMO company. You have to do upfront of the investments have to be upfronted, and the returns come later. Newland was probably doing very badly till the time orders didn't come. But stock has gone up 4-5x in just less than a year's time the moment orders came. So this is a very sort of in that sense different business you have to understand. You can't really look at quarter on quarter kind of number. So we think all these companies are very well placed to capture that a very structural upcycle which is there in that space, which is going to be there for next 8-10 years.
right, Vikas, hi, morning. And just going by your strategy notes, talking about PSUs as well, having delivered very strong returns in business cycles, and there are a number of names that have been flagged off, the likes of HP, NTPC, etc. And now you have that basket as well that has been extended with the likes of railway names or even defense names. What is it that you make of the entire PSU basket and talking about these sectors in specific?
We don't look at really as a PSU basket, but we look at always as a segment. We were earlier bullish in PSU defense plays, which has played out really well. As the power sector started doing well, they had also done well. PSU banks, we are quite positive. If you see everywhere, I think, especially if I were to talk about PSU banks per se, there were three problems in the PSU banks: asset quality, governance, and technology. If you say slowly, all three have been addressed. Asset quality has been fully provided for. Governance has been very well addressed. I think all banks have been merged, and now we have few large banks, and the CEOs of these banks are phenomenal people. I mean, they are leading a transformation in those banks, and it's always very, very pleasure to chat with them that how they are leading such a big transformation. And lastly, technology, which was earlier a very big differentiator for most private banks 10-15 years ago, now has become plug and play. So most PSU banks have spent a huge amount of money enabling them on the technology side. So all these three getting addressed, I don't see any reason why there should be such a large gap in the valuation with 18-19% ROE of most PSU banks, which are still trading below book. So I think that re-rating will happen in times to come. And I think we are quite positive in the whole space. So wherever you see, governance and sectoral tailwind happening, whether it is PSU or private, I think, you should look at, and I must give government the credit that they are enabling these PSU, which are really very good assets in terms of delivering without interference from the government, from a governance perspective, which is a very, very heartening thing.
Vikas, quite tempted to ask you, with so much primary paper hitting the markets, anything amongst the new issuances which interests you in particular?
Comment on a particular issue, but we always look at every issue coming through. Of course, you have to be very, when markets are very buoyant, you want to look at companies with the right valuation, right management. Whenever such a comes to your point, it's never. So I won't comment on a specific name, but we always attend to all the companies which are going public.
Because they say that when there is excitement in the IPO market, that is an indication of retail, and that is an indication that markets are about to peak out. I mean, hearing this story from last 1 year, and the excitement only has picked up more, and markets have not peaked out. So do you think this is an old school comparison? We should not think that, okay, IPO market excitement means end of the market.
So what kind of time frame you're looking at? See, as India transitions into a large economy, $5, $6, $7 trillion, you will have to see many more IPOs coming through. I think there will be periods of extreme bubble where every low quality companies also go through IPO, and those are the pockets of period where you have to be worried. Where the low quality companies start getting equally compared and get values, and those are the. I think we have still not seen some of them, but I would not seriously worry about quantum of capital to be raised, because whenever any economy is in a transition phase, and India is in a very big transformation and transition, and it should not be looked at with the same lenses as we have all looked at in the previous times and eras. So, and I'm not saying that every company is good which is coming public, but so whenever you see, and we saw that in period in somewhere in 22 when all new tech companies, many companies just went through through euphoric phase, and we saw what happened, right? So whenever you see that, you got to worry. I am not seeing that yet, but you have to keep your watch up. I think I'm seeing that in the SME segment, by the way, where you are seeing absolute crazy subscription for companies which have not been around, comparing valuation to the last large market, major companies. But that's something where I'm seeing euphoria. But I think in the main board, I'm not seeing many euphoric yet. It might get there, but I'm not at this point that I'm worried on that aspect.
Because why do you like power now? I mean, what is that underlying theme in power which is exciting?
So, Nicholas, what is happening? If you see in last 10, 12 years, there is hardly any investment which has happened in the thermal power, right? And there was some stress period, a lot of consolidation has happened, but no new capacities have come. But the demand has been steadily rising. And to make it, we have now manufacturing, growth is happening. So demand sector is rising, demand is rising led by manufacturing, domestic consumption with the new infrastructure, and more importantly, data center. And by the way, data center are very, very power hungry setup, right? They are like new factories. So demand is rising, and in next 3, 4 years, we are almost staring at the power shortage, and renewable cannot meet that. Let's face it, that renewable cannot meet demand of power what we need at this point in time. So we are beginning to see that massive investment coming in the thermal power over next 3, 4 years, anywhere between 45 to 50 gigawatts, right? And this time around, there are no Chinese player to build around it, right? Only domestic players will be able to build that. So that investment cycle is picking after long, and we see that next 3, 4 years, very huge traction happening in that. And in the power ancillary sector also, globally, there is a reinvestment happening, whether it is transmission, whether it is, the entire enabling infrastructure. So we see the entire pack, which has been underinvested significantly over last decade, is going to see a new change happening. And this is another medium. I can't call it a very long-term trend, especially being in the thermal one, because I don't know what, but at least it's a medium-term trend, which will be creating serious business opportunity. And we are seeing both on the capex side as well as the operating side good opportunities there.
One of your top holdings is Aditya Birla Financials, and there's a change of guard there. Things could look up. Could it become the next ICICI Bank in making? I think that was your thesis. But suddenly, this is one space where the Reserve Bank of India now seems to be coming out with a very different viewpoint, which is that go easy on unsecured loan. Large part of the for NBFCs in India has been growth in unsecured loan. If Reserve Bank of India is uncomfortable, could this be more like a bottleneck for future growth?
I think the regulator's job is to play counter-cyclical measures, and I commend RBI to kind of playing that role when things are going very well, to come and give a nudge that guys be careful. Their job is to manage systemic risk, and I'm very happy with that. With what RBI has done, they have just made risk weight high. So if you are an unsecured loans are always very expensive, right? I mean, they're between 16 to 25% kind of range. So with the risk weightage, I think the cost will go up, which I think these companies will be able to pass on. And so I think I'm not very worried. And regulatory transitions will always happen. Good quality companies run by good managements will always attend to any kind of such regulatory. And we have seen it across many sectors, be it insurance, be it mutual fund, and I think it passes on. So I'm not worried at this point in time, especially if the company is in the hand of a very solid leader. And that is true with most NBFCs. So as long as the liability side is sorted, cost of capital is sorted, I'm sure whatever the cost increase has happened, that will pass through. And any capital needed for attending capital adequacy also will be raised.
Vikas Khemani, appreciate your time. Thank you for staying with us.